Hey everyone, and welcome back to the channel. Today, we're tackling a topic that can literally change your financial future, the Roth IRA. If you've heard this term thrown around but have no idea what it means, you're in the right place. By the end of this video, you'll understand what a Roth IRA is, why it's so powerful, and how you can get started with one today. Let's demystify retirement savings together. So, what exactly is a Roth IRA? The name sounds complicated, but the concept is surprisingly simple. IRA stands for Individual Retirement Arrangement. It is a special type of investment account designed to help you save for retirement with some amazing tax benefits. The Roth part is what makes it unique. With a Roth IRA, you contribute money that you've already paid taxes on. We call this post-tax money. Now, you might be thinking, why would I do that? I already paid taxes. Well, here's the magic part. Because you paid taxes up front, all of your qualified withdrawals in retirement are 100% tax-free. Let that sink in. All the growth, all the earnings, all the money you take out after age 59 and a half, it's all yours, completely free from federal income tax. This is a huge deal compared to a traditional IRA, where you get a tax deduction now but have to pay taxes on your withdrawals later in life. Let's talk more about these benefits, because they are the biggest one, as we just covered, is tax-free growth and withdrawals. Imagine you contribute to your Roth IRA for 30 or 40 years. Your investments grow and compound over time. When you retire, that nest egg could be substantial. With a Roth, you get to keep every single penny of that growth without giving a slice to the government. This is especially powerful if you expect to be in a higher tax bracket in retirement than you are now. Another fantastic benefit is flexibility. Life happens, and sometimes you need access to your money before retirement. With a Roth IRA, you can withdraw your direct contributions, not the earnings. Just the money you put in at any time, for any reason, without taxes or penalties. This makes a Roth IRA a surprisingly flexible savings tool, almost like a supercharged emergency fund, though it's always best to leave it for retirement if you can. Plus, unlike some other retirement accounts, Roth IRAs have no required minimum distributions, or RMDs, during your lifetime. This means you're never forced to take money out if you don't need it. You can let your investments continue to grow, tax-free, for as long as you live. You can even pass it on to your heirs, who will also enjoy tax-free withdrawals. It's an incredible tool for building generational wealth. Okay, so a Roth IRA sounds pretty great, right? But who can actually open one? This is where eligibility comes in. There are two main requirements. First, you need to have earned income. This means money you get from working a job, whether it's a full-time salary, part-time wages, or even freelance or gig economy income. If you're earning money, you'd likely qualify. The second requirement is related to your income level. The government sets income limits for who can contribute directly to a Roth IRA. These limits change almost every year to adjust for inflation, so it's always a good idea to check the latest numbers on the IRS website. For 2024, if you're single, your modified adjusted gross income must be under $161,000 to contribute. If you're married filing jointly, that limit is $240,000. There are phase-out ranges, meaning if your income is close to these limits, your contribution amount might be reduced. But don't worry, even if you earn too much. There's a strategy called a backdoor Roth IRA that might still allow you to contribute, though that's a topic for another video. Now let's talk about how much you can put into your Roth IRA. This is called the contribution limit, and it's also set by the IRS each year for 2024. The maximum you can contribute is $7,000 if you are under the age of 50. If you are 50 or older, you get to make what's called a catch-up contribution, which allows you to put in an extra $1,000 for a total of $8,000 per year. It's important to know that this limit is for all of your IRAs combined. So, if you also have a traditional IRA, your total contributions to both accounts can't exceed that annual limit. You don't have to contribute the full amount all at once. You can set up automatic monthly transfers, say $583 a month, to hit that $7,000 max. Consistency is key. Even contributing a small amount regularly can grow into a huge sum over time, thanks to the power of compound interest. So, you've decided a Roth IRA is right for you. How do you actually open one? The process is much easier than you might think. You can open a Roth IRA at most major financial institutions. We're talking about brokerage firms like Fidelity, Vanguard, or Charles Schwab, or even through newer fintech apps like M1 Finance or Robinhood. The first step is to choose a provider. Do a little research. Look at their investment options. Check for any account. Many have no fees to open or maintain an IRA, and see which user interface you like best. Once you've picked one, the sign-up process is usually done entirely online. It's similar to opening a regular bank account. You'll need to provide some personal information, like your name, address, date of birth, and social security number. After your account is open, the next step is to fund it. You can link your bank account and transfer a lump sum, or better yet, set up those automatic recurring contributions. We talked about this pay-yourself-first strategy is one of the most effective ways to build wealth. But wait, there's one more crucial step. Funding the account isn't enough. Your money is just sitting there in cash until you actually invest it. This is a common mistake beginners make. An IRA is just the container. You need to choose what you put inside it. Most providers offer a wide range of investment options: SUCA stocks, bonds, mutual funds, and exchange-traded funds. If you're a beginner and all of this sounds overwhelming, don't panic. A great place to start is with a low-cost, diversified index fund or a target date fund. An S&P 500 index fund, for example, lets you invest in 500 of the largest US companies all at once. A targeted fund is even simpler. You just pick the fund with the year closest to your planned retirement, like a Target 2060 fund. It automatically adjusts its investment mix to become more conservative as you get closer to that date. It's a fantastic sit-it-and-forget-it option. Let's recap what we've learned. A Roth IRA is a retirement account where you contribute post-tax money. Its biggest superpower is that your investments grow and can be withdrawn completely tax-free in retirement. You need earned income and must be under certain income limits to contribute directly. For 2024, you can contribute up to $7,000, or $8,000 if you're 50 or older. You can open an account online with a brokerage firm, fund it, and most importantly, invest that money so it can grow. Starting your investment journey can feel intimidating, but opening a Roth IRA is one of the single best financial decisions a young person can make. The sooner you start, the more time your money has to grow through the magic of compounding. Even if you can only start with $50 a month, just start. You are building a foundation for your future self, and that is an incredibly powerful thing to do. I hope this video cleared up the confusion around Roth IRAs and made you feel empowered to take the next step. It's a tool that can provide you with financial security and freedom in your later years. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and hit that subscribe button for more content on personal finance and investing. If you have any questions, drop them in the comments below. I'll do my best to answer them. See you in the next video.